Hello, very good morning to all, and welcome to a brand new week ahead. I'm Kelvin Wong here again. Welcome to today's Daily Dose of Market Insights. Today will be Monday, the 29th of April. So before we start, as usual, let's take a quick look at the disclaimers first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. This presentation is not an offer or solicitation to buy or sell, no financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so before we jump straight into the short-term technical outlook of the various cross-asset classes, like the major stock indices, the major FX pairs, and as well as the two key commodities market that we covered, which is West Texas Oil and Gold, XAU/USD, let's have a recap of what has taken shape early this morning, Asia time zone, and as well as in the US session on last Friday. So let us start with the US session on last Friday first in terms of economic data releases. So in terms of economic data releases over here, we do have the US PCE data release, which is the more favorite inflation metrics that the Fed tends to actually watch instead of the CPI data. So let me expand my screen over here. So if you look at the core PCE data, which is the one that is excluding food and energy prices, actually came in slightly above expectation, 2.8% year on year from 2.6%. So if you look at the trend of the core PCE data over here, it's not actually coming down as intended in terms of, okay, so it was almost flat over here compared to the previous month of February, but it actually came in slightly above expectation. Market is expecting to come down to 2.6%, but it remains the same at 2.8% versus the previous month of February. So what we could see over here is market is still looking at a rather elevated inflation pressure in US. So that is also talking about that Fed dovish pivot has been more or less been diminished for this 2024. So at most, what we are expecting is market is now pricing only one interest rate cut for 2024 rather than 6 interest rate cut that was being priced in at the start of this year. So how do we know that? Very quickly, just go on to the CME Fed Watch 2. So for those who have joined our daily dose, this shouldn't be totally alien to you, but for those who are totally seeing this for the first time, I urge you all to actually take a look at it. Just Google CME Fed Watch 2. This data is not live, but actually is being updated at most about 1 hour later based on the current pricing of the Fed Fund interest rate futures market. Then from there, they're able to calculate the implied probability of what is the market is being pricing in on the expectation of the Federal Reserve action. That means whether it be cutting or whether it be hiking. So if you look at the one for the month of May, which is 1st of May, which is pretty much closely on Wednesday, where we're on a holiday. That means Thursday Singapore time. Very clearly, there will be no interest rate cut for the month for this coming Wednesday. That means i.e. Singapore time Thursday early morning. So maintaining it at 5.25% and 5.5%. So if you want to look at it, how do we compare it on a aggregate basis? By looking at the one of this one called compare probability. Okay, so this will give us the entire probability here. So if you are talking about right now, right, the Fed fund rate is 5.25% and 5.5%. So if you go down the calendar, okay, this is American data. So the first digit you see is month. So for the month of June, right, only 12% is looking for a 25% cut, 12% odds. So even in July, 33%. If you scroll down the calendar over here, only the month of September, then we see it coming in at 73% chance. All right, then thereafter 93% chance of another cut if September doesn't host, And if you look at December, okay, so if December they're only looking at 34% chance for it to go down much lower to 4.75% to 5.5%, given that right now at 5.25%. So what we could see down based on the pricing of the Fed Fund futures interest rate market as being calculated by the CME Fed Watch 2, only one interest rate cut is being priced in, and it will come as early as only as in September this year. All right. So if you're looking at the current situation over here, there's a drastic change, okay, on the markets. So that's actually causing the 10-year US Treasury yield to inch much higher. All right. So if you look at the current situation over here at this point in time, the 10-year US Treasury yield is actually inching much higher. All right. Okay, shipping higher high, holding above the 4.5% level. Given this is the 4.5% is the previous key medium term resistance level that has been taken out. So if you look at the current trajectory of this 10-year US Treasury yield, is actually inching much higher. So going forward, potentially the next key resistance to look out for will be for sure the last December high, not December, last October high, last year October high at this 4.5% level. So above 5% level give us the key longer term resistance at 5.2% level. So what is this 5.2% level? 5.2% level is also the upper limit of this long-term circular ascending channel that is in place since March 2020 low. Okay, 4.2%. So given the rise in the US 10-year Treasury yield, it also supports the dollar strength as well. So if you look at the dollar index as a whole, okay, is trading above the 20, 50, and the 200-day moving average. And right now, it's actually looking to actually retest last year high at 107 level. This is the dollar index. And primarily speaking, the dollar index is actually being supported by only one particular key currency, is the yen weakness. So how do we know that? If you have to plot the this thing over here, let me share with you. Where is it? Yes, so this is the 5-day rolling performance of the major currency as of 29 as of today. So if you look at the stark strength of the dollar against the Japanese yen, 5-day is a 5-day rolling performance. So it's now showing a 5-day rolling performance of positive 2.9% rally the dollar against the Japanese yen. For sure, this is the strongest dollar. I mean, the dollar is the strongest against the Japanese yen, but almost flattish against the rest of the currency. And what we could see over here is that it's the weakest against the Aussie dollar. So it's actually down negative 1.73%. Let us show what's going on in the Aussie dollar. So why the dollar is actually weak against the Aussie is due to the fact of the China-related stock market performance that is pretty strong in the last 5 days. So especially on the Hang Seng Index breaking above the 17,600 level. Okay, so that actually explain why the dollar is actually underperforming the Aussie dollar right now. All right, and the rest is kind of sideways over here. So that's actually explain the ongoing key dollar strength. Yes, dollar is strengthening, but strengthening against the yen right now because of number one, the Japanese BOJ is not showing any firm sign of hiking the next interest rate hike, because BOJ on last Friday they actually didn't give any clear indication that when will be the next interest rate hike will be in Japan. So previously market is penciling in the month of July, but that is actually not really live right now. And also given the fact that on last Friday, which I shared with you during last Friday daily dose, the Tokyo core CPI data, that is fresh food, excluding fresh food and energy, actually came in below expectation, and it actually dropped also below that 2% BOJ target. But during the press conference, BOJ Yuda is pretty much confident that the Japanese economy is no longer slipping back into deflationary mode, despite that the Tokyo CPI for the month of April came in below 2%. He's pretty much confident that for a longer term, the stretch the word is longer term perspective, the Japan economy is inflation numbers will actually hit that 2% will still hover within that 2% BOJ target, but that's for the longer term. But he didn't give any indication will BOJ be in favor of doing another hike in the month of July. So that actually explained the yen weakness against the dollar at this juncture, where the Fed is actually deemed to be much more in a hawkish vibe compared to BOJ. Bank of Japan. All right, so that actually explained the rally of the dollar yen. So then for the US stock market over here on last Friday, so the stock market was actually very bullish, being supported by the mega cap stocks, all thanks to the strong earnings of Google and Microsoft. Keeping alive the AI optimism play in US. So we see Nvidia is up by positive 6.18% as well. So the one that is kind of underperforming the US major stock indices will be the mega cap stocks. So you know that there's this Magnificent Seven stocks. So within the Magnificent Seven cohort, the one that is underperforming will be Apple, down negative 0.35% on last Friday, and Tesla down negative 11.11%. So the reason over here is Apple do not have a much AI focused product line suit at this moment in time. So that actually explains its underperformance. But overall, due to the very strong heavy weighted performance on Nvidia, Microsoft, and Google on the SPX and the Nasdaq 100, that led the SPX and the Nasdaq 100 to actually record a daily close on last Friday. The SPX positive 1%, the Nasdaq 100 positive 1.65%, and due to the very strong performance on Nvidia due to the AI optimism, the Nasdaq 100 managed to end last Friday with a gain of positive 4%, and last Friday weekly gain of positive 4% is the strongest weekly gain. So if we share with you on the Nasdaq 100 over here, so this was Nasdaq 100 gain on last Friday. Okay, positive 4%, but still trading below the 50-day moving average. All right, but overall, what we could see over here is that the Nasdaq 100 last Friday gain, very interestingly, is the strongest weekly gain since the week of. Okay, give me a minute. Yeah, it's since the week of 13th of March last year. Okay, 13th March last year. So that's close to about 1 year. We call it strong outperformance last week. But nevertheless, we got to be more cautious. Why? Because it's still below the 50-day moving average. Right. Okay, over here, the blue line over here. This is the daily chart. It's a 50-day moving average. Okay, because I plot it in a daily time frame using the trading view parameter weekly chart, but moving average based on the daily time frame, so that we could do multi time frame analysis on a single chart. Okay, now given that that pretty much sum up for today's key economic data releases, and also there's one particular event I want to share with you, is there's some positive news flow up from China as well due to this. Okay, let me share with you. Okay, okay, so there's this China property developer that is jumping as much as 25%. So that actually lead to a very strong positive feedback loop into the China stock market and spreading over to the Hang Seng Index as well, because he said that it has made some progress and reached an ad hoc agreement with bondholders in terms of its offshore liquidity situation. So as we know that China property developer is in a doldrums because of this ongoing weakness in the China property market. So any little positive news flow out from the China property front could actually ignite a very strong positive feedback loop into the China property stocks. Then eventually it fell down into the rest of the China stock market, and thereafter into the Hang Seng stock indices as well. So this actually has this kind of very strong interlinkage relationship, given the significant we call it impact on the China stock market has on the real economy of China. Okay, so that's explain why the strong out move in the Hang Seng Index this morning. Then what do we have over here? And also that's for the key data on on the economic front. So now let us now cover to the short-term technical outlook on the FX first, market first. So I want to stress on the dollar yen. So dollar yen, we were bullish previously last week. Okay, so where does the index not the, index, the dollar yen is hitting right now? So in this morning Asia session, the dollar yen actually strengthened up another two big figure move by surging to printing to an all-time high, not all-time high, close to this 35-year high, no, 34-year high in April 1999, major swing high peak at 160.21 level. So what do I mean by this from technical perspective? So let me now share with you the technical chart. So let us cover the short-term technical outlook on the FX market first. But before we jump to the hourly chart, I want to cover the longer term chart on the dollar yen so that you guys could see a bigger picture. Okay, then from there we do a top-down analysis to filter down to the short-term technical outlook for today. Okay, now let me share with you my chart so that you guys could see the screen. Okay, so what you see right now over here is this is the dollar yen. Okay, so dollar yen right now is actually testing the this medium term, the major ascending circular long-term circular ascending trend line that I draw from the low from September 2021 is in the middle part of the channel, the dotted gray line here at 15930. And so what is this 15930? Fibo extension level of 0.618, okay, taken from the low of March all the way projected from October 2022 high, swing down towards the January 2023 low, and as well as another graphical resistance will be the April 1999 major swing high area over here, okay, before giving rise to that long-term bearish multi-year downtrend, all right, for 5 years. Okay, so now the key thing over here is reach a graphical resistance and coupled with Fibo extension level at 15930. And if this is long, then if you look at the daily time frame chart over here, we go down to the daily time, so we know there's a key resistance at 15960. So we go to the daily time frame. If you look at the daily time frame, at the bottom over here, it's the rising Bollinger Bandwidth. So what I'm doing by this rising Bollinger Bandwidth is coming to a certain upper limit, this line over here, the previous swing high of January. All right, so what it means that last Friday move and today's Asia session move is a bit overextended on the upside. So given being overextended on the upside, plus is hitting a key, has really hit a key long-term pivotal resistance at 15960. That means there is a risk of at least a minor setback on the hourly time frame. So if you go down to the hourly time frame, so what I have for today on the dollar yen is using the 160.30, which is a short-term. If you look at it over here, there's also a couple of shorter-term Fibo extension level hitting at the 160.30, slightly above the 159.60 on the weekly chart. So using the 160.30 as my pivotal resistance for today, I will actually flip to we do have a risk of a bearish short-term bearish bias for this minor setback scenario to unfold. Why minor setback scenario to unfold? Because of the Bollinger Bandwidth that is extending to hit a key swing high area that I show on the daily chart, potentially for a setback, all right, because of an overextended up move since last Friday. So as long as 160.30 is not surpassed on the upside, potentially the minor setback scenario could unfold. Support levels to watch for on the short term, 157.60 followed by 15670 level. All right, this level over here, also 15670 is the former pullback resist, a former we call it pullbacks, the pullback support of this former minor ascending channel resistance level. Okay, and if you look at the 157 15660 is taking into account of this last sharp rally from 19th of April. You put it up to today's intraday high that also confluence with the 38% and the 50% Fibo retracement. However, an hourly close above 160 30 will invalidate the short-term bearish setback scenario to see the continuation of the impulsive move. Next resistance to watch will be the Fibo extension cluster level 16160/80, 16320/16365. Okay, so that's for the dollar yen. So I explained earlier on, the Aussie dollar is actually riding on the tailwind of the strong short-term bullish movement on the Chinese equity market. So you see the Aussie dollar also squeezing up above our last Friday short-term pivotal resistance at 65.45, clearing above the 50 and the 200-day moving average as well. So I'll be using the 200-day moving average today, acting as a key short-term pivotal support 65.25, flip to a short-term bullish bias to see this potential short-term push-up to get unfold. Next resistance will be at 66.10, will be the minor descending trend line resistance that I drew from 8th of March, followed by 66.40, which is the minor swing high area of 12th of March, 21st of March, and as well as 9th of April. Only an hourly close below 65.25 will invalidate this short-term bullish bias to see another round of choppy decline back into the sideways configuration again. 64.85 followed by 64.60 is 64.85 is being taken out on the downside. Okay, so these are the next two resistance if 65.25 is taken out. 65.25 short-term pivotal support is taken out today. 64.85 followed by 64.60. Then the euro dollar over here. Okay, so the euro dollar continue to trade in a kind of a sideways range configuration below our short-term pivotal support level that we highlighted, below our short-term pivotal resistance that we highlighted on last Friday, 1.0725, 1.0740. Okay, which is also below the 20-day moving average. So no change, we'll be using 1.0740 as my short-term pivotal resistance level. So still maintain that short-term bearish bias within this sideways range configuration. Bottom of the sideways range support level will be on last Friday's swing low before it rebounded in today's Asia session. 1.0680 will be the level to watch. 1.0680 taken down on the downside. The next near-term support level will be at 1.0640, which is also close to the minor descending trend line, minor ascending trend line support that I drew from the low of 16th of April, and also confluence with the minor swing low of last Tuesday at 1.0640. However, an hourly close above 1.0740, this level here will invalidate this short-term bearish bias for the setback scenario to unfold to see in another round of counter trend rebound rally extending, exposing the next resistance area at 1.0780, followed by 1.0820, which is the 61.8 Fibo retracement and 76.4% Fibo retracement of that previous down move from 9th of April to 17th of April. Okay, this level here. Sterling dollar. Okay, so sterling dollar, I'll be using the 200-day moving average as a resistance level, 125.70. So as long as 125.70 short-term pivotal resistance hold, still maintain that bearish bias for that potential setback scenario. First support level to watch will be last Friday's swing low at 124.60. A break below 124.60 exposes the next near-term support at 123.90. However, hourly close above 125.70 will invalidate this short-term bearish bias to see the extension of this minor counter trend rebound scenario to expose the next resistance at 126.40, followed by 127.10 for the sterling dollar. So pretty much mixed back on the FX market from a short-term technical outlook perspective. Now, FX major stock indices. So let us start with the Hang Seng Index. So the Hang Seng Index very clearly last Friday returned neutral because of the mixed elements. So this morning it broke above the neutrality range, 17,700/17,600 level. So with that, given the fact that its momentum is getting bullish at this juncture, over here the RSI start to shape higher high as well. Okay, higher high. okay, hovering at the overbought level. So given that it's now at the overbought level, potentially there could be a bit of setback coming into play. So as long as this setback, minor setback, didn't pierce below the 17,600 short-term pivotal support that I have for today, so we flip to a short-term bullish bias on the Hong Kong 33 on the back of positive China news flow. Next resistance to watch will be at 18,350, which is this level over here. 18,350 is the minor swing high area of 12th of April and 16th of November last year. However, only an hourly close below 17,600 will invalidate this short-term bullish bias. That means we're talking about that push up from this morning is a failure breakout above 17,600 level. Then thereafter, we will see another round of nasty choppy down move to retest the 200-day moving average, acting as a support at 17,210 level. All right, so that's for the Hong Kong 33, flipping to a short-term bullish bias given this morning's bullish breakout above the 17,600 and 17,700 level on Hong Kong 33. Japan 225, the Japan stock market is actually closed today for a public holiday, but nevertheless the futures market is still open, so that's why that's where OANDA's prices is tracking it right now. So it's now hovering at the 20-day moving average that squeeze up that resistance level that we highlighted on last Friday, 38,800. So as long as 38,800 short-term pivotal support holds, we still have that bearish bias within a complex sideways range formation that is in place since the low of 19th of April. Okay, kind of a sideways rangy kind of configuration. So first support level to watch for today will be at 18,050. A break below 18,050 exposes 37,680. However, an hourly close above 38,800 potentially sees will invalidate this short-term bearish bias to see a squeeze up for the next resistance to come in at 39,390, followed by 39,810 level, which is the minor swing high of 9th of April and 12th of April. German 30. So German 30 managed to now hover right below the short-term pivotal resistance that we highlighted on last Friday, 18,310. So since this level has not been taken out, we will still maintain that short-term bearish outlook, but with a tighter, higher short-term support level for today at 18,150, which is also close to the 20-day moving average acting as support. Only a break below 18,150 exposes the next support level, which was last Thursday's swing low at 17,900 slash 17,840. Okay, level is 7,900 slash 7,840. However, an hourly close above 18,310 will invalidate this short-term bearish bias. Then potentially we'll see a much more substantial recovery towards 18,400, 18,490, and even retesting the current all-time high area at 18,620 next for the German 30 index. Then now on the Wall Street 30, so the Wall Street 30 last Friday was actually continuing to underperform against the US Nasdaq 100. Why? Because the US Wall Street 30 doesn't have heavily weighted tech stock inside its component, so that actually explains its underperformance last Friday against over the Nasdaq 100. So with that, no change, still using the 8,590 as my short-term pivotal support level. So for the support of pivotal resistance, pardon me, sorry, a bit of tongue twisting. 38, I repeat again, 38,590 will still be the short-term pivotal resistance that we have on the US Wall Street 30, i.e. the Dow Jones Industrial Average. So as long as 38,590 short-term pivotal resistance is not surpassed to the upside, we still maintain that short-term bearish bias. Okay, but however, first support level to watch will be much tighter for today, will be last Friday minus US session minus swing low area at 38,110. Only a break below 38,110 exposes the next near-term support level at 37,690. However, a break above 38,590 with an hourly close above 38,590 will invalidate this short-term bearish bias to see a squeeze up. There is an extension of this counter trend rebound scenario for the next resistance to come in at 38,930 next. Okay, 38,930 next with which is the minor swing high area of 5th of April to 10th of April at 38,930 next. Then for the as Nasdaq 100 over here, it did a squeeze up from our Titan key short-term pivotal resistance at 17,700 level last Friday, but right now it's actually resting right exactly at the 20-day moving average. All right, 20-day moving average. So with that, the RSI is also shaping kind of a bearish. There's a bearish divergence that is taking shape as well on the daily RSI. Okay, it's a slight flattish RSI, whilst price action shape higher high. So that's considered a bearish divergence as well. So given the mixed element on the Nasdaq 100 below key short-term resistance, the 200-day move, the 20-day moving average, I think as a resistance, and the upper limit of this minor ascending channel that I drew from the low of 19th of April. So we will flip to a neutrality stance on the Nasdaq 100, neutral between 17,810 and 17,580 on the Nasdaq 100 for today. All right, so that's pretty much sum up for the major stock indices, which also have a rather mixed back performance across the board as well in terms of the technical configuration. So now spot go. All right, so for spot go over here, let's flip to spot go. So no change for spot go, still using that 2,330 2,300 level as my short-term pivotal support level, still maintain that short-term bullish outlook for that recovery scenario. But first resistance it got to surpass will be at 2,365 before exposing the swing high area of 12th of April and 19th of April, acting as a next resistance at 2,420 in the short term. However, an hourly close below 2,300 will invalidate these recovery scenarios to see the extension of the minor corrective decline phase to unfold next. Next support level to watch will be at 2,265, followed by 2,235 next. All right, for spot gold XAU/USD. Then for the WTI crude oil over here, if you look at the daily time frame, it's still continuing to hover within a medium-term uptrend phase that from the low medium-term uptrend phase, holding above the 50-day MA and the 200-day moving average. All right, at 80.80, okay, 80.80 over here. So now with that, still no change, still using that 80.80 as a short-term pivotal support level, okay, for now. But the first resistance level to watch will be at 85.05. So that's last Friday's swing high before that slight take shape in today's Asia session. And so confluence with the 20-day moving average acting as a resistance as well at 85.05. So first resistance to watch will be 85.05, then thereafter followed by 86.35, which is the minor swing high of 16th of April and 19th of April. Then thereafter followed by the 5th of April and 13th and 14th of 12th of April swing high at 87.70. So it's more like a seems to be that it's consolidating in a sideways range configuration, but holding above the 50-day moving average. So no change. 80.80 short-term pivotal support still maintain that short-term bullish bias on the West Texas oil within a minor sideways range kind of rangy kind of configuration. First resistance to watch 85.05 followed by 86.35. Only an hourly close below 80.80 will invalidate this short-term bullish bias to see another round of minor corrective decline scenario to expose the next support area at 78.80/78.40 on West Texas oil. Okay, so that's pretty much sum up for today's daily dose of market insights on the technical short-term technical outlook component. So before we go, let's take a look at the calendar of what are the things to look out for today. So for today, do not forget today itself, the Japan stock market is closed, so no key data up from the Japan economy. So throughout the European session, do keep a lookout over here. Okay, so today will be 29th of April. So there's actually, give me a minute over here. Yeah, so one of the key member of the Eurozone for sure be Germany will release its preliminary inflation data for the month of April. So market is expecting around 2.3% year on year, almost the same at 2.2% that was printed in March. So this is out at 8 p.m. Singapore time today. And during the US session, there is nothing much to actually take a look out for, except for at 3 a.m. Singapore time, where the US Treasury Reserve will release its Treasury refunding financing estimate. So if this refunding financing estimate starts to be pretty much huge, that could potentially drive up the 10-year US Treasury yield, okay, potentially. So that could actually impact the FX market as well from a potentially a dollar strength, and also if the US 10-year treasury rate starts to goes up, and given in the light that today's there's no release of any big tech US stocks, that could actually put a bit of pressure on the US major stock indices through a higher longer term cost of funding. All right, so that's 3 a.m. Singapore time today. And then thereafter, we do have Japanese industrial production for the month of March and retail sales for the month of March out at 7:50 a.m. Singapore time tomorrow. That's before the daily dose at 11 a.m. Then we also do have Australia retail sales as well, 9:30 a.m. Singapore time. Then thereafter, the all important China manufacturing PMI for April, and non-manufacturing PMI for April, that's the services PMI, out at 9:30 a.m. Singapore time. And also on the same day, we have the Caixin manufacturing PMI. So this Caixin manufacturing PMI is slightly different from the MBS manufacturing PMI, because the MBS manufacturing PMI is compiled by the government body, whilst Caixin manufacturing PMI is compiled by Caixin, which is the private, we call it so-called the private news publication or media publication, but that consists of more SME company. All right, over here, so something to look out for as well. But usually this number shouldn't have a huge divergence so far. All right. Okay, so these are the key data to look out for today, and as well as tomorrow Asia session, early Asia session before the start of our daily dose tomorrow. So with that, that pretty much sums up today's daily dose. So I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.